Hey, here's Mark Orr again for another financial lesson. Now I get tons of questions about long-term care insurance. Do I need it? What is it? So I'm not going to tell you if you need it right now. This lesson I'm going to tell you what it is, okay? Long-term care insurance. Well, you may have somebody in your church or your mom or grandmom or Aunt Lily, whoever, be in an assisted living facility or a nursing home, or maybe they're having someone come to their home and take care of them every day. And what types of things are these? They're typically not medical, skilled nursing types of things. They need help with bathing, dressing, going to the bathroom, getting up from the chair or the bed to a couch or that kind of a thing. Or maybe they have a cognitive impairment, like Alzheimer's is in the news all the time. So, well, that's what long-term care needs are. And long-term care needs could last, if someone has Alzheimer's, could last 10, 12 years. If they have a physical problem, maybe they had a stroke and can't take care of themselves, can't eat, dress, etc. That may last 2, 3, 4, 5 years or longer. We don't know. The average is about 2.5 years. So, long-term care insurance came about, 25, 30 years ago. And way back then, in relative terms, the costs weren't nearly as high as they are today. For example, if you're in an assisted living facility in most states around the country right now, it's probably going to be $3,500 to $5,500 a month. And that's going to buy you a little apartment, 3 meals a day, and somebody coming in looking after you, maybe helping you with your medications, of course, bring you down to the dining room or what have you. If you're in a skilled nursing facility and have a semi-private room, it's going to be a little bit more than that. If you have someone coming to your home, you're looking at between $12 and $20 an hour. And so an 8-hour shift could be $160 or it could be $100. So it's pretty expensive. Round-the-clock care is very, very expensive in your home. So a lot of people knowing that, gosh, it could cost me $40,000, $50,000, $60,000 a year if I needed care today. Where's that money going to come from? I only have $250,000, and in 5 years that'd be gone, and what's left for my spouse? So they think, well, what about long-term care insurance? Well, you can buy a long-term care insurance policy, and they come from a number of the top major insurance companies. And in fact, that's how I got my start in the financial services business. I was a long-term care insurance specialist back in 1997. And so that's all I did all day, every day, talk to people about long-term care. Well, I wanted to do more than that and then became a CFP and got my stockbroker's license and became a registered investment advisor and so on and so forth. But anyway, this is where I got my start, so it's near and dear to me. Now, why is it near and dear to me? Because my grandmother, when she was 94, up until that time, she was very, very healthy. She used to walk on the beach every morning about a mile in her early 90s. She'd either swim in the ocean or the pool, depending on how much waves there were. And anyway, she was very healthy, go dancing in her 90s. Well, in 94, she started really slowing down. And she needed to be put in an assisted living facility. So down in Fort Lauderdale, where she was, that was about, back then, $5,000 a month. And so what little money she had, or what money she had, started going down every month because that was a big bill, much bigger bill than she had where she was living before. So she was in an assisted living facility till age 99, and then she spent the last 1.5 years, 2 years of her life in a nursing home. She died one day before her 101st birthday. And so she had 6, 7 years of care that she needed. It was very, very expensive. So I saw the money that was going out with my family and the aggravation, and not aggravation, but the whole stress that it caused on our family. And I said, you know, there's a bunch of baby boomers that are going to be in my grandma's position many years from now or decades from now, and there's got to be a way. And then I found out about long-term care insurance, and the rest is history. So anyway, long-term care insurance allows you to pay a premium, and the premium is going to be dependent on your age, your health, unbelievably or not, if you're married or not, or if your spouse gets coverage, if you are married or doesn't, and the policy benefits that you have. Now, here's a quick overview of the policy benefits. You'll either have a daily or monthly give you the choice, do you want a daily or a monthly benefit? I won't go into all the ramifications. So you have your daily benefit is one choice. The next major component, besides your age and health, etc., is how many years do you want the insurance company to pay for that benefit? Okay? Now, so you're 55 today, or you're 65, and by the way, when I got started in long-term care insurance sales, most of my clients were in their late 60s, early 70s. Today, when I do a long-term care policy for one of my clients, they're usually in their late 40s or 50s, sometimes early 60s. Today, the way the price of long-term care insurance is going up, if you're 70 years old, that's going to be a big pill to swallow. So anyway, the earlier you get it, the better. I bought my long-term care policy when I was 40. Everyone thought I was nuts. I'm smiling today because my premium is like this big. Anyway, so you have your daily benefit. The next thing is your benefit period. And what that means is how many years or months once you go on claim, in other words, you can't bathe or dress yourself or you have Alzheimer's or something like that, how many years or months is the policy going to pay either that daily or monthly benefit, okay? So that's your benefit period. And that, in most states, is as little as 2 years to unlimited. So in other words, if you have a problem at age, say, you have a problem at age 50 and you can't bathe or dress yourself for 3 decades. Well, if you have an unlimited benefit policy, it would pay that benefit until you no longer needed it. But if you only had a 2-year policy, and it would pay that daily benefit or monthly benefit for 2 years. And after that 2-year period of time, the insurance company, they fulfilled their obligation, they would stop paying you. But wait, I'm still in the assisted living facility, I'm still getting home care. Where's that money going to come from? Well, now it's on you because the insurance company did what you asked them to do when you bought that policy. Obviously, a 2-year policy is going to be a lot less expensive than an unlimited. Generally, people will buy a 4 or 5-year policy today.